Let's talk about one of the absolute toughest questions in investing. It's not what to buy, it's when to buy it. Today, we're going to use a company you've definitely seen around, Deckers Outdoor, to build a step-by-step framework for figuring that out. You've probably seen their Hoka running shoes everywhere, right? Or their Ugg boots. I mean, they've been a huge success story. But that popularity creates a real puzzle for an investor. It's one thing to love the product, but knowing the exact right moment to invest in the company? Well, that is a completely different ballgame. And that right there is the heart of the problem. You can find a fantastic company. I mean, one with amazing products and a great business. But if you buy that stock at the wrong time, you could be waiting a very, very long time to see a return. The real goal is to figure out how to separate a great business from a great investment opportunity. So, how do we do it? How do we solve this timing puzzle and really stack the odds in our favor? Let's dive in. Okay, so quick heads up. This is not financial advice, of course. What we're doing today is acting like detectives. We are building a practical checklist based on the key signals that professional analysts look for, and we're just using Deckers as our case study to learn a process that you can apply to your own research. All right, first up on our checklist, we have got to decode the stock's momentum. What story is the stock's price actually telling us? Is it picking up speed? Is it slowing down? Or is it about to make a U-turn? To figure this out, analysts use something called a momentum cascade. Now, I know it sounds super technical, right? But honestly, the idea is pretty simple. Think about it like checking a weather forecast. You check the forecast for today, for this week, and for the whole season to see the bigger pattern. A momentum cascade does the exact same thing for a stock's price. And here's how we break it down. We look at three key timeframes: the short-term trend over the last 4 weeks, the midterm trend over the last 12 weeks, and then the really big picture over 24 weeks. We're basically checking to see if the story is consistent across all three forecasts. So here's the magic signal we're looking for. It's all about alignment. After the stock has taken a bit of a dip or corrected itself, what we want to see is all three of those timeframes, the short, the medium, and the long term, all start pointing upwards together. That unified trend is a really powerful sign that the momentum has truly shifted in our favor. Okay, next up, we're digging into price versus performance. In other words, how is the business actually doing, and are we paying a fair price for that success? First, let's talk performance. And wow, Deckers has been a powerhouse. The company has shown some seriously strong and resilient earnings. But what's really crucial is that its earnings per share, or EPS, has often grown way faster than the S&P 500 average. So that tells us the business itself is fundamentally solid. But how much are we paying for all that performance? That is where the PE ratio comes in. And honestly, the easiest way to think about it is as the stock's price tag. A high PE means you're paying a premium for each dollar of profit. The stock's expensive. A low PE means you're paying less. It's basically on sale. And this is where it gets really interesting with the Deckers story. During its big growth spurts, all that excitement drove its price tag way up, meaning the stock got pretty overvalued. So the signal we're looking for is for that PE ratio, that price tag, to cool off and come back down closer to the average for its whole sector. So that's it. That is the sweet spot we are hunting for. That perfect moment when the company's fantastic earnings performance is available at a much more reasonable price. We want that high quality without paying that super high premium price. Now for our third clue, and this one is kind of like being a spy. We're reading the insider signals. What are the company executives and the big institutions doing? Believe me, their actions can speak volumes. So, get this. In 2025, Deckers executives went out and bought over 1,800 shares of company stock with their own money. This wasn't some standard bonus or stock option plan. This was a direct personal investment in the company's future. So why is this such a big deal? Well, as the research points out, this kind of buying is a strong confirming indicator. It is the ultimate vote of confidence. I mean, think of it like a chef eating in their own restaurant. If the people who know the company inside and out are buying, that is a very powerful signal. The second signal we're looking for here is trading volume. High trading volume tells us that the big players, we're talking pension funds, mutual funds, are interested and they're actively trading the stock. Their involvement provides stability and, really importantly, liquidity. And wow, Deckers passes this test with flying colors. The stock consistently trades more than 3 million shares a day, on average. This just confirms that there is significant institutional interest, and that's a great sign of a healthy, robust market for the stock. All right, we've gathered all of our clues, we've got momentum, we've got valuation, and we have the insider signals. Now it's time for the final step. Let's combine them all to pinpoint that optimal buy zone. This is where all our detective work really pays off. By layering these different data points on top of each other, we can create a really powerful checklist to help us spot what could be a fantastic time to buy. So here it is, our optimal entry checklist. We're looking for that moment when, number 1, all 3 momentum forecasts turn positive. 2, the valuation is reasonable. 3, the company's earnings are still strong. 4, analyst sentiment turns positive, like when a rating system such as the Zacks rank upgrades it to a buy. 5, we see insiders buying after a price drop. And finally, number 6, trading volume stays high, confirming that the big institutions are still on board. And that's the real power of this approach, right? It takes this really tough, often emotional question, is now the time to buy? And it turns it into a checklist of objective, data-driven signals. It's about replacing guesswork with a methodical process. So we'll leave you with this thought. Yeah, we use Deckers today, but this framework isn't just about one company. Now that you have the checklist, what other great businesses out there could you start to analyze? Happy investigating!